Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Macro Monday time, let's take a look at some charts. I'll start with Bitcoin, which on low time frames continues to try to paint an inverted head and shoulders. 69K would be the neckline. The vertical red line there is the Powell press conference. I don't know if we'll see a move above 69 into the conference. I highly doubt it. I'm assuming this pattern fails. I'm assuming we don't actually get back to all-time highs here. Volumes on the ETFs were a little bit soft today, so inflows probably also on the softer side. I imagine everyone's just sort of risk off the rest of the month, certainly risk off into whatever Powell has to say and drop on us. So I don't think broadly now's the time to look for opportunities in highly risky stuff. Miners included. I'll talk about that at the end. But alts specifically, I think the Solana casino stuff probably dying down here a little bit, I'd imagine. You know, when somebody raises 10 million and loses 10 million by burning the tokens on accident, if that's not the top, I don't know what is. That's definitely a top thing. Looking at the cloud again, as I'll do with most of Legacy today, mean reversion is in the cards. Kijun targets abound everywhere. Okay, so I broadly expect everything to retrace quite a bit. In Bitcoin's case, 56 is on the table, right? If we get it, great, I'm ready. If we don't, that's okay. I'll be watching the Williams fractals. Definitely time to be patient and just watch things play out. Now, as bearish as that sounds for Bitcoin, Legacy, similar vibes here. Again, this is why we love the cloud. It's the same analysis every single time. Doesn't matter what it is. We have a TKC clamp here. The S&P has held above the Tenkin for 6 months, effectively. Not quite 6 months, we'll say 5. NASDAQ, same thing, held above the Tenkin. And we're starting to look more and more toppy up here. The first stop for the S&P would be 500 on SPY, QQQ 425, something like that. What really worries me though, on the risk side would be these hefty clouds we've got on the SPY and the QQQ, because cloud enjoyers know what I'm about to say, which is a potential bearish edge-to-edge move to watch for. SPY down to 464, QQQ down to sub 400, 395 thereabouts. So that's potentially something to watch for. I don't think that happens this month. It probably happens in early Q2. You could imagine some sort of recessionary call or something. I don't know, right? There could be some macro reason why we retrace a bunch, and just something to watch for. The cloud is certainly saying, be careful up here. Momentum has stalled out on US equities for sure. And I certainly expect Bitcoin dominance to continue to do well. It's doing well today. Bitcoin down slightly under 2%. Most alts just getting obliterated again today. So I think the natural progression in March for dominance is definitely higher. A curious setup on ETH BTC as well, in the face of all this risk stuff unraveling, in the face of the ETH ETF approval odds plummeting. This is increasingly looking like a bearish breakdown to me and not a bullish consolidation zone or reversal. Now, this could easily continue to range for another 6 months from 0.05 to 0.06, sure. But if this breaks down, it's probably going to get pretty ugly for ETH BTC. I'm already bearish ETH. I've got bear goggles on ETH. I get it. You know, the ETH people don't care. But I think the trade becomes interesting when we start to hear of capitulation. I would love to see validators get peeled off down here. You know, I'd love to see some emotion, some volume, some rage quits, something that would tell me, yeah, maybe ETH is rotatable again. Even, I don't know, the .sol people, do they exist? .sol people dunking on the .eths, something from a sentiment perspective if we get down here would be very interesting. Zooming out on ETH BTC, you know, that would make sense as a level if we break down, right? This is the previous messy inverted head and shoulders. This was the failed diamond bottom that brought us lower. This is Bitcoin halving. ETH and most alts do best after Bitcoin halving. So the easier trade, honestly, is a sell-off into Bitcoin halving and then figure itself out at this lower bound level. I think what's helped keep ETH up here is obviously the ETF stuff, but that appears to have faded considerably. And if we want to look at ETH GBTC, I mean, that's a new multi-year low today on that ratio. So that is not looking good as far as a potential, it had this inverted head and shoulders that just kind of withered away here. And that is not a happy looking chart. And if we look at the ETH discount, back to about 22% on the discount, I think, again, this trade becomes more interesting in the 30s. I don't think we see 40s or 60s. I'm under the assumption that the ETFs get denied for whatever reason. Grayscale goes back to court, they win, and a year from now we have an ETH ETF or something, but it's going to take a minute. So I do think there's a tradable setup here if the discount widens out a bit and the market sours on ETH. That's sort of the double whammy that makes this interesting again. But here I think your downside risk is pretty considerable on ETH, especially with the Sol mania we are seeing. Before I talk about some legacy stuff here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice: crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. And I don't know why today, but AVAX for some reason is going in the complete opposite direction. So I don't know what that's about. Most everything here on the layer ones, on gaming, on any category you're going to flip through today is just getting absolutely obliterated. And if we go to the BTC pairs, my guess is most everything, right, is negative against BTC today. And that's why we're seeing a jump in dominance. Sol still relatively strong and a few other things. But for the most part, across the board, markets are getting out of risk by the looks of it. Looking at flows for the previous week, institutional flows, we hit another record, 2.9 billion. So again, that begs the question a lot of people are going to ask, why aren't we higher? Why aren't we moving higher? Why aren't we more bullish? Well, people are selling, right? People are selling into the ETFs. You're seeing long-term holders sell, and those Bitcoin are finding new buyers in the ETFs. It's that simple. We've got miners selling. We've got BTC MSTR trade blowing up in somebody's face. So there's a lot of reasons why, even with the crazy flows we've seen, we're sort of just sitting here at all-time highs. Eventually, that supply-demand equilibrium will favor demand over supply and price goes up, right? That may take us into late April. The best trade, I always say, is just, be patient and let the market come to you. I don't think there's a clear picture for bullishness right now, just across the board. Looking at where the flows are coming in and out, more out of Grayscale, which is great. The less of an impact they have on the market, the better. IBIT getting the lion's share, Fidelity getting the lion's share, and a few other providers seeing outflows likely into US products because fees are lower for those products. Short Bitcoin seeing a jump in AUM, as is BitX, which I'll get to in a second, which is the 2x ETF, some out of ETH, some out of Sol. Bitcoin, again, is the focus here. Everything else is just sort of small potatoes globally. If we look at the BitX flows, this is something that kind of worries me, similar to NVIDIA, because we're seeing a lot of flows kind of at the later stages here into a levered product. So I almost expect this to get washed out by quite a bit. That's just typically what you see. People get excited about something kind of in the later stages, and they buy the top. They are the exit liquidity. That's just the way it is. So OI for OI's sake rising, I'm not too concerned about. Seeing leveraged OI jump is certainly more concerning. So that's one to continue to watch. If we look at BitO, which is just the futures ETF, that's also seeing big outflows. Most of this likely going to the other ETF products is my guess, but the net flows have still been positive for BitO as well. Like I said yesterday, it's all about Powell this week, 2:30, be there or be square, watching what he has to say. What color tie does he have on? Is his hair parted to the left or to the right? Tune in for all the exciting things there. But he will likely be extremely hawkish, is my guess. And he's got room to bring the markets down. Markets are at all-time high. If markets were crushing lows, it would be a different story. If CPI were crushing lows, it would be a different story. If unemployment was rising substantially, it would be a different story. But he's got room to be quite hawkish on that meeting. And then we have some more Fed speakers on at the end of the week. As far as the CME rate probabilities, he will likely hold, definitely going to hold this meeting, likely hold the next meeting, no meeting in April. And then potentially as late as June, July. If they want to get cuts in without running into the election, they're going to have to do it pretty soon after June, if they even want to do it at all. Maybe they just cut a 50 in July or something. I don't know. Like the way this calendar is lining up with the election, it's cutting it awfully close if they want to remain sort of impartial. Looking at Truflation, it has ticked up quite a bit. They do adjust this frequently. So you'll notice from week to week, it may have changed a little bit. So some of the inputs change or the percentages and the allocations change. In any event, it has clearly bottomed here at around 2% and is slowly rising again. And this is the real concern for Powell. This is nightmare fuel. This is what keeps him up at night, is the potential for inflation to kick off again like it did in the, what was it, 70s and 80s. Good on Truflation for not committing a chart crime with the y-axis here. But you can see we are mirroring this kind of echo bubble potentially in inflation. And so once again, why would Powell cut? Like, he's not going to want to. We may see 0 cuts this year. That's definitely on the table, unless there's significant evidence otherwise to maybe have an emergency cut if unemployment kicks off. Even in the UK, their Truflation has started to sort of bottom over the past 6 months, let's call it. And I'm guessing 3%, 4% is not their target either. All the more reason to try to shield assets from inflation. And, it's been said many times, but if we do not get to 2% and 3% is the entrenched level, that's a huge win for something like Bitcoin. If your purchasing power is continually getting eroded, you will look for alternative means to protect that purchasing power. Looking at the Fed's own CPI estimate, continues to rise. Core CPI down, I believe, and core PCE coming down slightly. PCE up, core down. Still not to the Fed's targets there either. GDP continues to look fine. There's no issues here. For the amount of money we're spending, the amount of debt we are putting ourselves in, we'd better see some results positive for GDP. The problem is once GDP potentially flips negative for 2 quarters, we just end up spending more and accruing more debt, and it's just a bigger problem, right? So you really want to get your house in order before junk hits the fan, so that way you can add debt to right the ship, right? That's the argument that many people are making now, that the debt is already out of control, and it's only going to get worse with a potential recession in the pipe here. Looking at reverse repo, we're down just under 450 billion. We hit a new low at 413, something thereabouts the other day. This may continue to just flatten out between 2 and 400 billion, and that is not bullish for risk assets if we are basically done draining the reverse repo. It's not bullish for banks. It's not bullish for yields. Well, it's bullish for yields, bearish for price of yields, or price of treasuries. In any event, this is just another signal that we're getting to the end of the line here. And if we look at where all that money is going, or where it's coming from, it's reverse repo pulling funds, money markets pulling funds out of reverse repo for short-term treasuries. And people keep throwing money at money markets. Real rates are positive, so that makes sense. Yields are high, so that makes sense. There's a lot of money sitting in money markets up here. And again, relative to banks, and what that means for banks, if you look at large versus small banks, cash reserves slowly ticking down, and small banks' cash reserves ex-BTFP ticking down pretty considerably. So we're definitely not out of the woods on the banking front. And if we look at yields, the belly of the curve continues to rise. The black line is today's yields. And this is a lot of movement over the past 2-3 months in the medium to long end back here. And that just eventually is going to cause issues. If we look at TLT and KRE, if TLT does not recover here, the long bond ETF, I expect KRE to make new lows. I expect more bank failures, more issues, more problematic type stuff into an election. And, things tend to get interesting into an election when we try to put out the burning fire, aka more liquidity, which is, again, good for risk assets, good for Bitcoin. So it's hard to see a bearish path long-term for BTC here. Looking at unemployment, and one thing that I don't really take into consideration enough is just how big the United States is and how from state to state and from region to region, the variance in all these data points is extremely wide, or can be extremely wide. And there are many states already that are hurting pretty considerably, well above the reported unemployment rate. This was as of January. So I'm guessing it's worse in some of these places already. Someone like Danielle DiMartino Booth has already been talking about, the SOM rule for the states. Many of them has been tripped. Jeffrey Gundlach has talked about that. So it does feel like it's only a matter of time where we start to see unemployment tick up pretty considerably. I say that, and at the same time, the same people have been warning about unemployment for 18 months at least. So we'll get there eventually. It's just hard to really pinpoint an exact date on it, but it does look like we're getting closer to the end here on unemployment. Flipping to housing, all this is about basically the consumer, right? Consumer debt, consumer's ability to pay for the Maslow's hierarchy, cost of living, housing, Wi-Fi. House listings continue to have price drops, which to me is a great thing. I think we need a ton more housing, especially with the immigration we're seeing potentially playing a role there. I've heard people discuss the issues with immigration and housing. I haven't really heard anyone talk about that relative to energy, but I think we could be seeing some energy costs crop up thanks to immigration as well. If we look at mortgage applications, they are down in the dumps relative to past few years, and no one wants to move. No one wants to buy a house because rates are as high as they are. So nobody can afford a house. Nobody wants to sell their house, and it just locks up the entire market. And there's going to be a lot of pent up demand once rates do eventually come down, probably in, 25, 26. And the question really becomes, do house prices follow that, right? I don't know. We'll see. Looking at gas in the United States, data out of AAA, seeing some areas here, Midwest, Mid-Atlantic, South, sort of perk up here on the red side of the spectrum. And then I don't know how anybody drives in California. $4.90 is like the median price. So I'd imagine some places it's above $5 there. Of course, the South having the cheapest gas. If we look at the year over year, gas prices continue to slowly rise. And this, of course, will play a role in CPI as well. And it will creep up in CPI. And it looks like, those energy price reductions rather, are sort of out for CPI at this point, and we will have a positive effect eventually here on the year-over-year number. Looking at our own country's oil production, it's higher than it's ever been. And to me, this is the most common sense argument for just draining the SPR completely. Yes, it's important to have insurance. It's important to have that backup just in case. But it's not like we don't have our own way to produce the oil. Not all oil is the same, I get it. But I personally see less of a need for an SPR if we are producing what we are producing. Now, if we were producing nothing, yeah, fill up that SPR, we need it. We need that insurance, we need that backup. But we certainly have the ability and means to produce, I don't know about refined, but produce the oil that we are producing, the most ever in history. Looking at oil prices, something else that, again, will not help CPI is oil perking back up here. And on the cloud, on the 3-day cloud, it's looking increasingly bullish. It's looking like this head and shoulders attempt may fail. This broader head and shoulders attempt may fail. I'm seeing calls for 90 plus oil prices once again. And that won't help anybody, maybe most importantly for this election cycle, if gas prices are back to 100 something. I expect Biden to not get reelected pretty handedly. And further, I expect him to just try to drain the SPR again. That would make the most sense for him politically. So why not? But if this continues, it's going to be harder and harder to reelect the incumbent, most likely. You'd have to look at historically, but I wouldn't imagine that would be great for Biden's chances come the election time. Looking at the energy sector ETF, I mentioned this last week. XLE looks great to me chart-wise. Fundamentals make sense if you're bullish energy here, and it's sort of paid its dues. It's spent multiple years in this ascending triangle, held above the cloud for most of it. So it looks like it's about time. And unfortunately, if this is bullish, that means risk markets probably not so bullish. CPI reinvigorated, right? and it lines up to me enough to take the trade. So anything above 94, I think, would be an all-time high on XLE. And if XLE does hit this target, the rest of the economy is probably not looking so hot. Flipping gears to Tesla, someone asked me about Tesla specifically, so let's talk about it. This chart is concerning for Tesla, obviously. And if you don't have a Threads account, by the way, if you want to watch people continuously dunk on Tesla and Elon, that's a great place for it. Seems like they've all migrated over there. But this is not helping the stock price, obviously, and neither is this chart here. The average resale price of a used Tesla just continues to get crushed. And this is down so much that the Hertz CEO had to resign after he bought way too many of these things. And the repair, the upkeep, the cost to maintain is just too much. So unfortunately, it looks like not many people want to buy these things at the moment. Looking at the Tesla chart, daily cloud legacy settings, it is quite bearish. And I wouldn't want to touch this until it's back above the cloud on the daily, right? So this could take a lot of time. This could squirrel its way around from 100 to 150 for the next year and a half. I have no idea. But this is not a bullish chart pattern. It's not a bullish trend setup. And you really want to get back in this thing when trend is more favorable. Similar to July 2021, April 2023, right? Those are the times to be long Tesla. Down here, it's not for me. I don't like buying weakness. I don't like catching knives. The fundamentals don't make sense to me for Tesla at the moment. So I really do not like that chart. Looking at NVIDIA and SMCI, again with the daily cloud, it's all about the Kijun, baby. NVIDIA, I would love to see NVIDIA back to 740, not because I want to buy it, but just the panic, right? The chaos, the anarchy. SMCI just got added to the S&P 500, right? And it's basically been kind of down only a little bit. This thing looks like it wants 730, 740 as well, kind of the same target as NVIDIA. And the longer both of these, the S&P, Bitcoin, ETH, all this stuff just holds at this level, the higher the likelihood of eventual mean reversion. And past that, it would be a bearish TK cross, right? That's going to take probably 4 weeks if this does not mean revert. But that as well is telling you this is not a bullish trade. So the easier trade is always going to be the Kijun bounce or cloud signals flipping back and forth. I just don't see a bullish case here in the moment for either of these in most of the market, right? SMH, same thing. I mean, this thing looks like it's ready for a trip back down to 200. Making our way through the rest of the Mag 7 here. Not much has changed, right? These targets have been hit on the cup and handles. Everything looks broadly ready for a pullback. This shouldn't be a surprise. Pop on the cloud on some high time frame with any of these, and you're going to see a level where prices would like to return. So it would make sense to me for everything here just to pull back a little bit. Microsoft potentially back to 370, I think that is. Amazon potentially back to 148, something like that. These pullbacks don't have to be that deep or long lasting. It's just everything looks just a little bit overtired here. Yeah, overtired. Meta 350, thereabouts. Some of this stuff has just had an incredible run. Now, Apple, like Tesla, to me, is dead money. This is not a bullish trade. This needs to be back above the daily cloud, right? I mean, it's simple. We need to see some energy here like November. We need to see some energy like early 23. That was a great trend. And it kept you in the entire time, told you when it was over, especially if you're using Williams fractals. But we are not in a picture that looks like that at all. Apple announced that they want to use Google's AI tools potentially for the iPhone. Interesting choice. We'll see, right? We'll see if that matters. But this is not a chart that I would want to touch here at all. Ideally, even this breaks like 165, right? Make a new low, get angry. Have Warren Buffett come out and say he sold something, right? Again, I want capitulation. I want anger. I want high volume nonsense. I want all that stuff to get washed out before I'm ready to jump into anything that looks like this. This could keep ranging for another 2 years, right? It just does not look like a bullish story building up in the moment. Looking at miners, not much has changed there either. Maybe this is WGMI, the mining ETF. Across the board, they all just look flat, weak, ranging. You could probably argue a falling wedge here on lower time frames, but the broader issue is just this mega chop solidation that WGMI is in. Anything above 20 probably gets my attention. Anything at 11 or 850, if it gets that low, gets my attention. But here it's just, again, there's just not enough meat on the bone for me that it makes sense. Coin continues to look fine, probably does fine. The ETH ETF denial, if that happens, will probably hurt Coin a little bit because they are expecting custody fees from that, as is the market likely, if there is no ETH ETF staking, which will likely not happen initially. That will hurt Coin. But they should have strong earnings relative to volumes, relative to their fair value accounting rules kicking off for their VC book. So I still think Coin will do fine. And there's even some stuff on Base kicking off, even though I don't think that revenue is necessarily anything to write home to Ma about. This trend looks fully intact. Anything at the bottom of this pitchfork, to me, is a better buy than even here at the moment. MSTR we talked a little bit about yesterday. Pulled back, I think it was down 15% at some point today. This just is not a buy to me until that premium to NAV collapses a lot. And ideally that probably occurs somewhere around the midpoint of this pitchfork, but that's got a ways to go on it yet. And Saylor still has at least 500 million that he wants to raise and buy Bitcoin with. So this just is, it's not a buy for me here at all. Square is one of the few charts that I really, really like still. It's got inverted head and shoulders. It's got a weekly cloud entry with a bullish TK cross. It's spent 3-4 years just in the doldrums down here. Halving is coming up for Bitcoin. Square is selling hardware wallets now for Bitcoin. So all this is sort of aligning for Square to do well, probably later in the year. The first target would be 105 to 120, but I really like this chart a lot, as I like Hood a lot. You know, Hood has escaped its range, still in the weekly cloud. If retail truly comes back, or if Hood is able to capture some of that volume, then Hood should continue to do well. You know, I like 46 potentially, eventually, which is going to take a long time. That probably takes us into 2025 if that happens, but this chart looks great to me. You know, this is what you want to see. Just a bunch of nothing for years and then a new range high and off it goes. Another one that many people have been talking about as I try to get bullish towards the end of the video. Don't forget to like and subscribe. The cannabis ETF, MSOS, also has sort of spent years down here. Now, there's probably an election play here. If Trump gets elected, I wouldn't imagine MSOS does well. But this is also curling bullish after, you know, a forever downtrend of nothing, right? So there are a few things out there. And then there's Zoom, which, you know, I'm not bullish on the company, but the technicals may align as such. PayPal similar, I don't have a chart, but the technicals may align for an eventual trade here, right? I don't know where the trade goes. I don't know if it takes us into 2026. I don't know if Zoom has to get acquired. I have no idea. But when you are just trying to knock on the bottom of a huge bearish cloud, similar to Hood, right? It's just spent kind of months and months down here. This is the type of stuff I like to stalk and watch and wait for a close into the weekly cloud. So look, broadly, everything looks pretty bearish to me. I think we're going to see mean reversions kicking off here, probably taking us into mid-April. And you just got to be patient. Let the market come to you. So for this one, like, dislike, comment, share, subscribe, and happy trading.